Perfect. So, yeah, welcome everyone to the presentation of Media and Games Invest, or as we call it, MGI. My name is Paul, CFO of MGI, and yeah, I will tell you a bit more about the MGI story today. So, to start right away with the people who are attending this Noble conference, so it's myself, Paul, Willy Kellich, our Senior Vice President of Finance, which is also here. So if you have questions, just reach out, or also Sören Bartz, our Head of Investor Relations, more than happy to also take one-on-ones and answer a lot of questions. To start right away here with the shareholdings of MGI. So we are a European listed company, listed on Nasdaq Stockholm actually in Sweden, as well as on the Frankfurt Stock Exchange in the scale segment. We have our biggest shareholders actually our CEO Remco Westermann, who also started and founded that business, started with 100% obviously and diluted himself through capital increases and some M&A transactions now to 28%. Then we have two very strong cornerstone investors on board, which is Oaktree, which held 9.1%. They came in with a capital increase for an M&A transaction. Janus Henderson from UK, also one of our biggest cornerstone investors. And then a lot of long-only investors like BlackRock, or also Skandia from Sweden, BMO from Canada. So a lot of great investors who are supporting us to really drive our buy and build model, where we obviously need access to capital to also do M&A transactions. Starting right away now with MGI in a nutshell. So MGI is a leading European ad software platform with a very strong access to first-party games content. And what we do now is actually in the end helping advertisers to drive very efficient user acquisition campaigns, especially in games content. At the same point in time also helping games publishers to drive monetization via in-game advertising. And that business has really taken over the overall games business because we started in 2012 as a games company, but have invested since 2019 much more into ad tech businesses and created a kind of flywheel where we have increased organic growth by realizing a lot of revenue synergies between both segments, where we will see a few more examples later on and how we do it. 252 million revenues is what we did now in 2021 with a very strong underlying profitability of 71 million. Overall, we saw 80% revenue growth with a 38% organic growth, and we have now 800 employees across the group, and half of them is actually based in the US, and 55% of the employees are actually tech employees, which also shows that we have transformed the business much more towards a software business these days. We have more than 400 software clients. We started actually with 100 in 2020. Have grown that especially in 2021 massively. And yeah, 94% of the software revenues is coming from Fortune 500 companies. And we saw a massive net dollar expansion rate of 172% in 2021. So all our customers are scaling and actually also increasing the advertising budget with us, and also games publishers which use us to increase their monetization per in-game advertising space have increased also their traffic on our platform. That brings us to the revenue by region, and here we see on the left side that with 69% North America, especially the US, is by far our biggest market now, followed by Europe with 19%. Important to mention these days, less than 1% is actually revenues coming from Russia and from Ukraine, so we've not been financially impacted from the current crisis there. Looking at the global reach, so we're combining a massive reach, so we have delivered 411 billion ads to end consumers in 2021, and have actually connected our ad software platform to more than 1.7 billion end consumer devices, which gives us a massive reach, and therefore we reach more than 250 million daily active users where we can show ads to, which actually provides us with very good access also to first-party data. And this is where also our own games come into play, but also the more than 20,000 games which are connected to our platform. So that's King with Candy Crush, for example, or also the casual games from Zynga connected to our platform to drive advertising. And we combine our own games with a lot of third-party games and create a lot of first-party data, which is especially from value in a world where the identifiers and the cookies going out of the market, and where the advertisers actually need a lot of data from the audience. And that is something which we also have kind of put together in the last years, so media and games and the synergies out of both. And that's also what we're showing here in the acceleration of the MGI flywheel. So we're combining first-party data and content, which provides us with an increased insights and much more data about the audience, pushing this data about the cohorts over to the advertiser, which can improve their targeting in the end, and which also helps the publishers to increase their monetization per advertising spend, because the advertisers are willing to pay more per user in the end, and the publisher receives a larger share per in-game advertising space. And this all together is also better for the end consumer, because we serve more relevant ads in the end to the end consumer. And this in the end has created a flywheel where more players in the games leads to more advertisers on the platform, because they also want to do advertising in the games. More advertisers again leads to also more third-party publishers, because they're following the advertiser spend, and this all together creates a lot of critical mass and has increased actually the organic growth of the overall platform massively in 2021. And this is also what we see here compared to the markets. On the left side we see the market opportunity of MGI. So we're operating in the digital advertising and digital games market with a market volume of 750 billion, and which is growing with a CAGR of 10% year on year, while MGI has been outgrown that market by combining media and games with 38% in 2021. And this is in the end the beauty of combining media and games, and where we have worked in the last almost 10 years by doing that and realizing a lot of synergies between the segments. That brings us to our core asset, which is our advertising software platform. And we have done a lot of M&A transactions over the last years, and especially since 2019 acquired a demand-side platform, a data management platform, and as well as a supply-side platform, and therefore cover the full value chain from the advertiser to the publisher. And we are now connected to more than 5,000 publishers via an SDK, which means we can get a lot of audience data which we push over to the advertiser. And we also work with a lot of big Fortune 500 advertisers together, like McDonald's, BMW, Burger King, which also want to place ads in games. And therefore, especially in the world where the identifier is going out of the market, to have this direct integration into content and crawl a lot of data on an anonymized basis and push that over to the advertiser is actually something where we're currently profiting quite a bit from the market disruption, and where we saw also in 2021 when IDFA came into play that we could actually take market share while advertisers were increasing their budgets on our platform, and also publishers were getting a better CPM, so better monetization per advertising space, and therefore all of them were increasing their wallet share. Here on the left side we see the revenue breakdown by ad platform. So 14% of the revenues is currently coming from the demand side platform. 86% is from the supply side platform. We have invested a lot into the direct integrations into publishers. And now in the end, the investment focus for the coming years will be much more on the demand side, because a 50-50 split would be ideal. Because currently we filling up this part with other demand side platforms like Trade Desk, for example, and we have quite a few M&A targets lined up to fulfill this gap, to make it 50-50, because that will increase also our margins again, because third-party demand side platforms usually taking 15 to 20% from the value chain, and this is something where we can also increase our overall profitability again. Then revenue breakdown per consumer device. Here we see that we are very strong in mobile in-app, so 71% of our revenues is coming from mobile in-app, which is actually one of the fastest growing markets out there, and 25% is connected TV, which is also one of the fastest growing markets. And these are our two biggest revenue drivers when it comes to the end consumer device, and therefore we are also perfectly positioned to drive further growth in the coming years. Coming now to the first party data access, which is again very important in a world where the identifiers and cookies going out of the market, because with the opt-ins on an anonymized basis we can still push a lot of data over to the advertiser, and he can still do efficient user acquisition campaigns. And here we have two kind of games within our company. So it's casual games, which are mainly monetized via in-game advertising space, where we usually launch 30 games per month, and therefore create a lot of new content and also generate more than 20 million downloads per year. And then we have the premium, so-called premium games, which is multiplayer games compared to a Warcraft and so on, where people play 3 to 4 hours per day, spend 50 to 80 euros per month, and where we have a customer lifetime of 5 to 10 years, and actually more than 50% of the revenues is coming from players which are more than 5 years in the game, which is massive. But here we see more single-digit organic growth, and therefore we're using these cash cows and maintaining them, but using them to invest further into more casual games and into our ad software platform, because that's where we currently see the biggest market opportunity to really drive that massive double-digit organic growth, which then again creates this kind of flywheel, and where we profit a lot from, because we're scaling the company the most. One example why it creates so much efficiency in the end by combining media and games. So here on the top of the slide we see our campaign management tool, where the advertiser can put in his user acquisition campaigns. So that's the Verve Group, that's our segment where we consolidated all the advertising businesses with. And on the bottom of the page we see one of our casual games where the ads are shown. And by doing everything in-house, connecting the advertiser directly with the games and placing the ads directly through our software in our own games, we have increased the revenues by up to 50%, because that's usually what the value chain takes, which means if we also acquire more games companies now, which are mainly monetized via in-game advertising space, and connecting them to our software platform, we can easily increase the revenues post M&A by up to 50%. And there's currently a massive market opportunity where we also have a pretty strong investment focus and strategy. We also have some M&A candidates later in the presentation. So that's in the end one of the examples what we're doing. Then talking also a little bit about ESG. So sustainability is also a key focus area for MGI. The biggest data consumption or energy consumption is actually our data centers. All of them are running now for 2 years already with renewable energy. And we, for example, also have planted a lot of trees together with our gamers. So if they plant a tree in the game, we plant a tree in the rainforest. So we do a lot also on the sustainability side out there. And another part is actually also the governance, which we're actively improving over time. So currently the headquarters of MGI, while operations are mainly in Germany and in the United States, the headquarters is currently based in Malta, and we're relocating that now to Sweden, which is also following the Swedish listing, which we did already in October 2020. And then on the governance side, as the company has grown massively over the last years, more than 250 million revenues, over 70% CAGR. We're now also expanding the board, and also the role of the CEO and chairman, which currently is Remco Westermann, the founder, will also be split when the relocation becomes effective. So therefore we're also improving the overall governance side and becoming more and more a bigger company, and therefore also making the next steps in terms of the maturity of the overall group. That brings us to the M&A strategy, and here we're following a buy, integrate, build and improve strategy. So buying mainly smaller companies with up to 40 million revenues, and then fully integrating them. That also differentiates us compared to other companies which rather keep the company standalone. And by integrating them fully on our platform, all the contracts, all the data centers, everything, we realize a lot of cost synergies. And then the third pillar is actually the build and improve, so ramping up the organic growth post M&A, which is in the edtech space, especially with sales, internationalizing the company, selling them globally. So we have more than 20 global sales offices. And within the games, it's especially also internationalizing games, bringing new languages in place, and then driving a lot of revenue growth also through user acquisition, where obviously we are perfectly positioned because we have all the user acquisition capabilities in-house with our software platform. And therefore, post M&A, we're increasing the revenues very often by 20-30% within the first 12 to 24 months. Looking now at the top 5 M&A targets. So as said in the beginning, we have done more than 35 M&A transactions in the last 8 years. 24 of them are actually in the mobile games content side, and 50 now in the advertising side. And what we can see here is that within the top 5 M&A targets, 2 of them are actually mobile games companies, which are mainly monetized via in-game advertising, which means by connecting them to our platform, we can increase the revenues post M&A by up to 50%, which then creates a lot of synergies and brings also the EBITDA multiple down. So we think, including synergies, we can acquire them for less than 10 times. And then the other 3 companies is actually demand-side platforms, which will help us to further improve also the user acquisition capabilities for mobile games. So there you can see already there's a big connection between media and games, which is also the key investment focus area for the coming years. That brings us to the financial performance of MGI. And what we can see here, it has been a pretty good ride. So very strong profitable growth over the last 8 years. We started with 15 million revenues and 2 million EBITDA. And in 2021, we have achieved now 252 million revenues. So that's euro. In US dollar, it's even a bit more. 71 million EBITDA and a 55 million EBIT. And what we see as well is that we have shown a CAGR in terms of revenue growth in the last 3 years of 77%, and have also diluted our EBITDA margins from 29.6% in 2018 to 21.6% in 2019. That was when we were entering the media business, and we were acquiring a lot of companies which were not as profitable. But as we were starting to scale them now, and by fully integrating them, we are now up to 28% again, while actually our organic growth have increased as well, so 38% in 2021. And we also been perfectly positioned to take further advantage of further market growth now in the coming years by combining media and games. A few KPIs which are also underscoring the strong performance of MGI. So on the left side, left upper side, the revenue split. So we have transformed the company from a games company where we started in 2012, much more towards a software company, with now 69% of the revenues coming from software, 31% direct to consumer. And within the ad impressions, we also see that we have grown that organically quite nicely from 15 billion ad impressions, which we delivered in the first quarter of 2020, to now 87 billion ad impressions in the fourth quarter of 2021. And on top, what we see here as well, we were doing some M&A transactions, so 173 billion ad impressions were delivered, actually taking M&A into account in the fourth quarter. We have also grown our overall software clients, so that's mainly games advertiser and games publishers, but also advertisers like BMW and McDonald's and so on, and have grown the software clients now by 410% in 2021, and we see also very strong retention rates, and with 95% of the customers are staying, and the 172% net dollar expansion rate also showing that they are scaling on the platform, and therefore we see an overall very strong organic growth, which we also didn't expect a few years ago when we were starting to combine media and games, but it really works out quite nicely. And this is also what we see in the development of our operating cash flow and CapEx development. So we see here that we have also improved our operating cash flow massively to now 65 million in 2021, with a very strong underlying free cash flow of 55 million. And this very high free cash flow is in the end achieved as we have a limited maintenance CapEx. So we don't invest the 5 to 50 million into a fully new game and start it from the scratch, and rather license games and buy the IP later if it's a successful game. And therefore the maintenance CapEx is in the end the further development of our IP-owned games, so the maintenance, and on top then we're also doing a lot of M&A transactions. So the 285 million which we see here in expansion CapEx, that's mainly in the end the M&A part. That brings us to the guidance for 2022, and we expect to grow with a 15 to 23% growth. We have discontinued certain businesses with a revenue of roughly 20 million euros, which is also the reason why it's lower compared to the previous years. Nevertheless, the 15 to 23% is fully organic, and we expect also that we can outgrow that quite nicely. We expect to grow the EBITDA to 80 to 90 million, which is from EBITDA margin rather stable. And here we also want to invest further into long-term organic growth. So we hire more people now in the US, but also in Europe, and rather keep the EBITDA margin stable while increasing obviously the revenues. And therefore we also are taking advantage of further innovation cycles which are upcoming on the edtech market, and where we expect that we can outgrow the overall market quite nicely also in the coming years. That brings us actually to the Vision 2025, and that's then also the last slide of the presentation. So where we want to bring the company to. And the first thing is actually talent, being one of the most desired global companies to work for, which means no politics, super innovative and also diverse. The second one is becoming one of the top 5 leading ad software platforms worldwide, which means fully vertically integrated, multi-format and fully transparent. And transparent is especially in the current market a big buzzword, I would say, because, and that brings us also to the third one, which is respecting our partners' values and delivering transparency to clients. Because there's a lot of games publishers which don't want to share their data with other games companies, and therefore we have also created a kind of software platform where it's always a consent-based data sharing, and they can also deny to not share the data, but still can push it over to the advertiser. And this is something which a lot of other platforms doesn't offer, so therefore we saw more games advertisers and publishers actually joining also in 2021 the platform. So it's all about transparency. And then the last one is actually building a white label software as a service at software platform. So we have everything in-house, all the tech now. And we also having some pilot customers which have requested, so it's games publishers, but it's also advertisers, which driving massive volumes. And usually the business model is we're taking a kind of usage-based fee based on the traffic which they generate on the platform. But we're currently also discussing with certain pilot customers if we should move to a software as a service platform. Or a kind of monetization model, which means they're paying then 10, 20 million per year, and then we would become the kind of SAP Oracle of the advertising industry. And it's a strategic opportunity, and we don't say that we don't do a lot of revenues now in the next 3 years with it, but it's a pretty nice opportunity, and that's our vision 2025. That brings us to the end of the presentation, and I think if there's questions, more than happy to answer them. Any questions? So we have 180 million cash on the balance sheet currently, and a net leverage of 2.8 times with a net leverage target of up to 3. So therefore, we have sufficient cash to do M&A transactions, but we need to be a bit more creative than in the past to make sure that we don't overdo it on the net leverage side.
The other question is, so you're going from Malta to Sweden. Is there a tax implication with that, or any other?
Yeah, there's a positive one actually, because Malta and the United States don't have a double tax treatment. Well, between Sweden and the United States, that's the case, which means we can push down a lot of cost from the holding once we have moved to Sweden. So it's rather positive than a negative, which is a bit of a surprise, but that's reality. There was another question. Usually that's the case. So within the heavily monetized in-game item sales games, so the multiplayer games, usually you do 90 to 95% via in-game item sales, but then there's a small portion also of advertising. But we're currently looking more to acquire more mobile games companies, which are mainly monetized via advertising. That's also, if you look at our top 5 target list, the top 2, the games companies, the monetization is more than 90% via advertising. It's for games publishers mainly, but it's also for other publishers which have content. But it can also be for big agencies which driving $100, $200 million budgets per year, which don't want to have a kind of usage-based fee anymore, and rather paying one big fee. But that's then much cheaper still compared to the usage-based model. Thank you. Any further questions? There. In terms of debt cost, or so we have placed the last, so we are financed, maybe to start with that, we are financed via equity and bonds, and also have credit lines from banks. And obviously the current share price is not there where we want to have it due to the current market sentiment. And therefore we have also done a few bond issues in the last quarters. And we have done it at 4.75% interest rate, which is not too bad, I would say. The bank's providing that at 3.8%. So that's the current status. And as it is improving over time, profitability is improving, net profits are improving, everything is improving. And we also expect that we can further reduce the cost of capital. The state, currently the market changes over time. So therefore, most likely we mitigate the increasing interest rates with the better profitability of the group and better ratings. Any further questions? Thank you so much for attending, and if there's any further questions, more than happy to take a one-on-one, and we are there out to answer questions. Thank you.